Well, hi everyone, and welcome to Buffeting Beyond Research Saturday Stock of the Week, March 28th. Yep, it's almost over, the first quarter, folks. And do you believe Dell is up 34% year to date? Yeah, now about 20 years ago, everybody had Dell in their portfolios, but then it went private, then it went public again. And all you have to do is remember, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. Well, let's look at this. Dell Technologies has absolutely been one of the standout performers over the past week, but with an important nuance. It rallied hard early in the week and then pulled back at the end. Now, why has Dell been so strong? Not just a one-week story. This isn't random. These are real drivers. AI infrastructure demand. This is what we talked about last week, too. And AI server revenue up 300% plus growing. It's got a massive backlog of $40 billion in enterprise demand. Cheap valuation versus the peers. It's only 11 times forward PE. Strong cash flow, shareholder returns. And right now, Dell is a legitimate AI infrastructure play. And that's just not hype. It's got the orders. But it's also trading like a momentum stock short term. And let's look at the numbers. And we even have some people forecasting 2027 numbers already. But look at this net income going up. And folks, here's the clean surplus ROE, and you can see it was kind of in the doldrums back here below the average stock. Then all of a sudden it started shooting up, looking very, very nice right now. And that's what the market looks at when they, especially the traders, when they start seeing these kind of movements in the clean surplus, well, any ROE or the cash inflows or the order inflows. They all had their own methods of what they want to watch. But here we are watching the clean surplus ROE, and it's going up. Now it's above the 13% of the average stock. Retention rate about 80%, which means it's taking 80% of the money it's making, putting it back into itself in order to grow. And these clean surplus numbers tell us it's growing. Now the net income growth, the 5-year average stock is 13.1, and you can see this stock started taking off around 2024, and boy, it's looking very, very nice. Average stock has a net income growth of 13%. Revenue growth averaging 11.8% for 5 years. Average stock at 7.1%. So that's where the growth is coming in. And so this stock is definitely being played out there, folks. Now, let's take a look at the past year. Year to date, up 34%. So this is the year to date, and you can see the first couple of months it didn't do anything. Then all of a sudden it got news about the new orders coming in, and it shot up. And it played around a little bit, and then bam, it shot right up again. And this is the past week in here, and you can see that between this week and some of last week, it really shot up. Trouble is, it's down Thursday and Friday, but look at the averages. So when we look at the averages in here, we look at the 20-day moving average, which is definitely moving up. And remember, we talk a lot about reversion to the mean, so it got ahead of that 20-day moving average quite a bit. And then it seems to be settling down Thursday and Friday. So you could see back here when it got too far ahead of that 20-day moving average, it really didn't do anything for a while until the 20-day moving average caught up to it. Then came down, tested it, and bam, shot up again. Now down here, the red line is that 200-day moving average, and the blue line, the 50-day moving average. And this is a buy signal that a lot of traders look at when the 50-day crosses the 200-day. That is a bullish sign. And even down here, when the 20-day moving average, again the green line, crossed over the 50-day and then over the 200-day, yeah, there's a buy signal in there for the traders. Now, it seems like it's a little overbought down here with this indicator, which is our intermediate term indicator. But, you know, if it comes back down and doesn't fall down through this 20-day moving average, hard to say that it could with all those orders that it has. It's moved a lot already this year, folks. Remember, the S&P is down almost 6%, down 5 weeks in a row, along with the Nasdaq. And this stock has been in a counter trend, and the trend is down in the S&P 500. And so this is counter trend because it's going up. So yeah, it's looking pretty good in here, folks. So the momentum people are after this stock. And let us look at the 5 years. Black line is the S&P 500. Blue line is Dell, of course. And we can see the S&P 500, how it's rolling over in here. So this is recent. Don't forget, this is 5 years. So just this year, right, which is where this line is, just this year, the market has been trending down, and this stock has been trending up. Yeah, so Dell looks pretty decent in here. The only problem is it doesn't have a high ROE like we like to see. We like to see a high and consistent ROE, but what the market is looking at is all the dollar signs are pointing up with the new orders, with the anticipated growth, with the anticipated income for next year, which is 2027 already. They're coming out with numbers. So yeah, it's looking nice in here, folks. So we've had another tough week. As I mentioned, 5 down weeks for the Nasdaq and the S&P 500. I think the Dow has been down 4 out of those 5 weeks. And you just go out this weekend, you take your mind off the market because it's just been too difficult to think about it. So don't worry, you're all sitting in good stocks, and they will come back nicely when they do come back. So you just go out, take it easy. Most of all, be safe. We'll see you back here in a couple of days.